as tensions between the West and China, especially the United States of America, are drastically increasing, largely due to the fact that China is becoming a major global power with wide-reaching influence. Many countries in the West, especially those closely aligned with the United States, have taken actions or been vocal about their partnerships with China. Germany, one of the leading global economies, which recently overtook Japan as the third largest economy, is one such country that has a very close alignment with the US in its foreign policy objectives. The German government and those in positions of authority in the EU have advised businesses to take steps to mitigate their exposure to the Chinese market, such as reducing investment and financial partnerships. However, this has not materialized any change, as recent reports indicate that German investment within China has been continuing and even increasing. Financial authorities within Germany have reported that direct investment within China has increased by 4.3% to a record high of 11.9 billion euros, which is about $12.7 billion. This indicates that German government appeals have made no tangible difference, and that German firms have and will continue their investments. The investments made by German companies in the last 3 years have been about the same as those made over the course of the last 6 years, indicating an upward trend. It's worth noting that many of these investments into China by German companies were made by reinvesting profits made in China back into China, rather than withdrawing them back to Germany. One important statistic is that German foreign investments in China peaked and rose to a staggering 10.3%, the highest recorded since 2014. This increase can be compared with other Asian investments made by the country in other Asian nations, which have mostly been stagnant. European nations are heavily reliant on China for all kinds of materials and in all sorts of sectors. The decoupling that many European nations speak of is a very big price to pay to separate themselves from Chinese suppliers. China, like the United States, has made many investments throughout the world, in many regions and countries, for reasons spanning diversification to mitigate risk, as well as for security and geopolitical influence. China has spent and invested its fair share in industries in Germany, as well as the EU, in sectors such as technology, all the way to energy projects. China sources a lot of microchips from countries in the EU, such as the Netherlands. However, recent chip sanctions or restrictions by the US government have significantly hindered its ability to transact in these products. As the US has created various obstacles in China's path for chip development, though China does have access to the EU and countries like Germany, if current trends continue, the US is expected to become Germany's most important trade partner by 2025. As it stands now, German exports and imports to China together totaled around 253 billion euros, which is about $272 billion over the course of the last year. Germany is by far the EU's top trading partner for China. China, like any superpower, has become a country Germany is super dependent on, with great economic leverage over Germany. As Germany is a country known for automobiles, the largest automobile companies in Germany rely heavily on the Chinese market for their, such as BMW and Audi. China has used this leverage to prevent Germany from entering into US coalitions that go against China's interests. One thing to keep in mind, however, is that even though China has kept Germany at bay, Germany does have clear differences in its views in various matters, such as disputes including Taiwan, Hong Kong, and the claims China makes over the South China Sea. One factor or facility Germany does have, which means that its trade will inevitably increase or remain an attractive prospect for individuals or companies within Germany, is the fact that Germany has a renminbi clearing center. This is in a nutshell an offshore Chinese currency converter. This allows Germans to settle their currency exchanges with the Chinese currency with ease in their own country. This heightened accessibility makes trade with China not something distant and filled with complexities. Germany recognizes that both the United States and China are indispensable axes of security as well as economic prosperity. As this superpower competition intensifies, Germany must navigate its policy to maintain fruitful relations with both. However, as it stands now, Germany is becoming more aligned with the US, both in terms of getting closer to greater economic dependence as well as following U.S. worldviews and objectives.